The U.S. Securities and Exchange Commission is preparing a major regulatory shift that could bring tokenized stocks onto decentralized finance platforms. According to Bloomberg, the SEC is expected to release an innovation exemption for tokenized stocks as soon as this week. This exemption would allow digital tokens linked to public company shares to trade on decentralized platforms, including those issued by third parties without the consent of the companies involved. That marks a notable departure from current market structures, where tokenized trading has largely remained within regulated exchange environments. The exemption could let crypto platforms offer on-chain trading of U.S. equities without full broker-dealer registration in certain circumstances. Officials plan to include specific guardrails in the exemption, such as exposure limits, disclosure requirements, and conditions tied to the program's temporary nature. Platforms that deny token holders voting rights or dividends could lose eligibility under the proposal. Regulators are said to be considering restrictions on platforms that omit rights such as dividends or voting access. This development is part of a broader effort under SEC Chair Paul Atkins, known as Project Crypto. Earlier this year, the SEC approved rules allowing 2 national exchanges to list tokenized versions of select equities and ETFs. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Using a depository trust company tokenization pilot, the expected exemption is designed to permit broader on-chain trading by crypto-native venues and some DeFi protocols during a limited experimental period. The implications are significant. If passed, this exemption could expand the reach of tokenized assets beyond traditional exchanges and into DeFi protocols. It could also attract new types of market participants who have previously avoided regulated platforms due to cost, access, or friction. However, the exemption is not a full endorsement of decentralized trading. It includes conditions and restrictions that may limit its scope. One of the key questions is whether platforms will be able to maintain compliance while offering the flexibility and speed of on-chain trading. For example, platforms that fail to pass on voting rights or dividend distributions to token holders could be excluded from the exemption. This suggests the SEC is trying to balance innovation with investor protection and market stability. Another key uncertainty is how this exemption will interact with existing frameworks for tokenized assets. The depository trust company pilot has already allowed some tokenized listings on national exchanges. Now, the SEC is considering a separate path for on-chain trading. This could lead to a bifurcated market where tokenized stocks are available on both regulated and decentralized platforms, potentially creating arbitrage opportunities or regulatory inconsistencies. The exemption is also expected to be temporary, which means its long-term viability remains unclear. Regulators may use this period to gather data and assess risks before deciding whether to expand or restrict the framework. In the meantime, crypto-native platforms and DeFi protocols may use this window to experiment with new models of on-chain equity trading. The broader context is that the SEC is actively working to integrate crypto into traditional financial infrastructure. This exemption is part of a larger trend where regulators most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Are trying to define the boundaries of tokenized assets and their place in the financial system. It's a cautious but forward-looking approach that acknowledges the potential of blockchain technology while maintaining oversight. The next signal to watch is whether the exemption is finalized and how it is implemented. The inclusion of specific guardrails and restrictions suggests the SEC is still refining the framework. Market participants will be watching closely to see which platforms qualify and how tokenized stocks perform in a decentralized environment. If successful, this could be a turning point for tokenized assets and their adoption in mainstream finance.